There are social media accounts that show people who are at a Minneapolis airport with baggage full of up to $1 million cash attempting to exit the country. Can you tell us or give this committee your viewpoints about people not using some other system, but taking cash up to $1 million through our airports to leave the country?
What we are trying to do at Treasury via FinCEN is to keep money from being wired out of the country through what are called money service businesses. We have issued a geographic targeting order bringing down the amount of reporting to $300 and also asking on the form, if someone is wiring money out of the country, are you receiving public benefits?
Mr. Chairman, thank you very much. Secretary, welcome to the Financial Services Committee. I'm delighted that you're here. Mr. Secretary, we've talked with you about a broad range of things, not necessarily related to FSOC and your chairmanship there, but I would like to, if I can, talk with you something about the word public confidence. And the word public confidence does have a lot to do with the financial stability of the country. There are reports in social media that have shown, and I don't want to put you in a position where you cannot answer this because of anything that you've learned in Minnesota with the $9 billion worth of fraud. But there are social media accounts that show people who are at a Minneapolis airport with baggage full of up to $1 million cash attempting to exit the country. And I have engaged several people who have worked at Treasury to ask their opinion about that. Not the relationship between how they got the money, but just that it's going out of the country and following the law. Can you tell us or give this committee your viewpoints about people not using some other system, but taking cash up to $1 million through our airports to leave the country?
Yes, so that is a DHS TSA function. We, having learned of this, we are attempting to integrate our FinCEN better with those forms. What we are trying to do at Treasury via FinCEN is to keep money from being wired out of the country through what are called money service businesses. So we have issued a geographic targeting order bringing down the amount of reporting to $300 and also asking on the form, if someone is wiring money out of the country, are you receiving public benefits?
These are all very important issues, and as you did talk about, Department of Homeland Security does have a role in this. I would suggest to you that Treasury probably has a philosophy about the role of the American dollar in world economy, the stability that we have, the use of wanting to make sure that the dollar remains that dominant use. But I would tell you that I will be very interested if you have a working group on this of us making ourselves aware, because it is an issue to people who simply see social media.
We look forward to working with you on that, Congressman.
Thank you, Secretary. Mr. Secretary, as you have alluded to, and as the discussion here has been about banks, community banks, the ability that they have, you recognize, because you spoke directly to it, about the stress that they are placed under as opposed to bigger banks. Could you please talk to us about what you believe the role is of home ownership, which is increasingly a part of the political discussion and debate and discussions for members of Congress back home, of solving our home ownership problem? And you've got almost a minute, boy, I'm giving you a lot of time, and interest rates as they correspond to people being able to buy their own homes.
Good. Well, thank you. And I would note that I was also a banks and financial institutions analyst for 35 years and was instrumental in working with the government to bring down American Continental and Sun State Savings and Loans, which were the beneficiaries of the Keating Five. Getting small banks lending again, we need to get them back into the mortgage market. No one knows their communities like small banks. And that having moved into the larger system, the strength and breadth of the U.S. mortgage market is choice. And we have lost the choice in the small banks. And I think we need to get them back into the housing lending business. And we are seeing, it's a tragedy that the average first-time home buyer is now 40 years old. 40 years old.
Well, I had a discussion last night with the realtors about their importance in this process too. So I'd like to once again make sure we see community banks and realtors and home builders all have an interest in
Gentleman's
this.
time is
I want to thank the gentleman.
I thank the gentleman from Texas. Before we move on, I want to remind everyone participating today to uphold the House's rule of decorum. And I'd like to remind everybody to respect the 5-minute rule. And having been a witness before Congress before in my executive branch days, it is important to note that our members can spend their 5 minutes and never ask a question or not. It's their 5 minutes. So let's try to be mutually respectful of each other. And I now recognize the gentleman from Massachusetts, the ranking member of our Digital Assets, Financial Technology, and Artificial Intelligence Subcommittee, Mr. Lynch, Massachusetts, 5 minutes.
Thank you, Mr. Chairman. Mr. Secretary, based on early reports, and this is an analysis done by Public Citizen and subsequent news reports, when the Trump administration came into office, they immediately took steps to either halt, dismiss, or roll back over 100 enforcement actions and investigations against corporations in its first 2 months in office, with a very heavy concentration on financial services, consumer protection, and cryptocurrency, totaling over $3.1 billion in potential penalties avoided. Now, as a member of the Financial Services Oversight Council, is that a concern that you have raised within the council, all these immediate dismissals of cases against financial services firms?
Well, I think the Biden administration had an extinction.
Sir, please be responsive to my question.
I am trying, sir, and this back and forth is just eating your time, that the Biden administration had an extinction policy for crypto
This
assets.
is when Trump came into office. I'm going to go to the next question because your answers on, Mr. Chairman, the answers have to be responsive if we're going to have a serious hearing here.
Well, the questions have to be serious.
Well, those are 100 dismissals of cases that the Trump administration came in and executed in their first weeks in office, like that. All of a sudden, all these crypto cases went away. The SEC was dropping cases. The Consumer Financial Protection Bureau dropping cases. And
well, sir,
look, you're on FSOC with all the heads of these agencies. This should be a serious question to you. Trust should be a serious question and a serious issue for the financial services industry, especially as the Secretary of the Treasury. Well, this is my time. I haven't asked you any more questions. I haven't asked you any more questions,
It's the gentleman from Massachusetts.
I'm trying to get to my next question.
Could you speak a little louder? I can't hear you.
Yeah, okay. I might.
Mr. Secretary, let Mr. Lynch proceed with his time. Put 4 seconds back on the clock, please.
Thank you, Mr. Chairman.
Yes, Mr. Lynch.
I just want to do a comparison of the FSOC reports. Let's go back to 2024, and then we'll talk about the current report. In the previous report, the members of FSOC expressed serious concerns related to potential risk to financial stability regarding the lack of explainability and high complexity of AI and the approaches that have a potential to heighten financial instability especially in the areas of bias and discrimination in credit decisions. That was in 2024. Your report in 2025 focuses on removing regulatory impediments. So in 2024, we were concerned about consumer protections, and now, under your leadership, we're concerned with eliminating regulatory impediments. The dangers, and that was a report during a time where the chairman and I were co-chairs of an AI task force. Those dangers haven't gone away. In reality, those dangers are still as severe for the American consumer, but they are absent from FSOC's report. So it's obviously you've eliminated or dropped that priority as an issue for FSOC. So can you explain the change from protecting the consumer and now eliminating regulations?
We are charged with financial stability, and we are focused on leveraging AI strength in the financial system resilience, but with economic growth and a security lens.
On the issue of explainability, any concern about that in the use of AI in the financial services industry?
I'm sorry, what was the question?
The issue of explainability, how when people apply for credit and are denied, we don't have the ability for AI to explain why they were denied. Is that a concern? I mean, we are talking about the trust within the financial services industry.
It could be a concern, but we don't view it as a priority for financial stability.
That's the truth. That's the truth. Okay, Mr. Chairman, I'll yield back. Thank you.